The money flow index is a momentum indicator that combines price and volume data to identify overbought or oversold conditions in a security. Here's a detailed explanation of how it works and how it can be used in trading. The money flow index is calculated using the following steps. Typical price. Calculate the typical price for each period, which is the average of the high, low, and close prices. Raw money flow. Multiply the typical price by the volume to get the raw money flow. Positive and negative money flow. Add the raw money flow to positive money flow if the price is higher than the previous period, and to negative money flow if the price is lower. Money flow ratio. Calculate the ratio of positive money flow to negative money flow over a specified period, usually 14 periods. The money flow index is calculated using the following formula. The money flow index oscillates between 0 and 100. Values above 80 are generally considered overbought, while values below 20 are considered oversold. A money flow index reading above 80 suggests that the security is overbought and may be due for a price correction. Conversely, a reading below 20 suggests that the security is oversold and may be due for a price increase. The money flow index can be used to confirm the strength of a trend. A rising money flow index in an uptrend or a falling money flow index in a downtrend supports the direction of the trend. Divergence between the indicator and the price can signal potential trend reversals. For example, if the price makes a new high but the money flow index does not, it may indicate a weakening uptrend. Similar to other oscillators, traders can use signal line crossovers to generate buy and sell signals. A buy signal is generated when the money flow index crosses above its signal line, and a sell signal is generated when the money flow index crosses below its signal line. The money flow index can be used in conjunction with other technical indicators to provide a more comprehensive trading strategy. Imagine you're analyzing a stock that has been in a steady uptrend. If the money flow index continues to rise along with the price, it confirms the strength of the uptrend. However, if the price makes a new high but the indicator fails to make a new high, it may signal a potential trend reversal, suggesting you might want to prepare for a possible decline.